Great. Thank you so much for joining us. It must be a very busy day. Let me just check on Santiago. In the meantime, why don't you give us a quick introduction about yourself and Persistence?
Yeah, absolutely. So my name is Tushar Aggarwal. I'm the co-founder and CEO of Persistence. At Persistence, we're doing a bunch of things across different quote-unquote sub-asset classes. So the first one being mostly around proof-of-stake assets. The second one being around NFTs, and the third one around synthetic commodities. So those are the kind of three asset classes with crypto native folks and trying to create products for crypto native people. Prior to starting Persistence, I was the first employee at Lunex Ventures, which is the crypto arm of a traditional venture capital fund called Golden Gate Ventures, based out of Singapore. In general, I've been on the media side of crypto through a podcast called Decrypt Asia, which had actually led to the opportunity at Lunex, but then wanted to be on the other side of the fence in terms of being an operator as opposed to a capital allocator. And in that respect, saw India as an opportunity. So I'd been based out of Singapore for close to a decade. But my thought process was that India has the third largest number of unicorns, and that passion, that ambition, that talent is there. But 80 to 90% of Indian unicorns were born after the year 2010, which is almost 10 to 15 years after startups of similar sizes came about in the US and China. So India has that talent to scale sort of global products, but it happens with a bit of a lag. And so with that view, I used to come down from Singapore to India very regularly to attend multiple hackathons and events, which is how a big part of the Persistence team came about. And happy to dig into all of the things during the discussion. And thank you, Arvind, for hosting this again.
Yeah. Hey, Santiago, welcome to our talk. Fantastic to have you here.
Hey guys, it's great to be here.
So I gave a quick overview of about you in the beginning of the talk, but we'd love to hear from you. If you just quickly introduce yourself, and we'll jump into the set of questions touching upon topic of raising your seed round.
Yeah, absolutely. And can you guys hear me okay? Can you?
Yeah.
You can. Okay, great. Yeah. So I guess a little bit about me. I been in crypto since 2012. My background is in game. I studied game theory, and so that's what drew me to Bitcoin. Just learning about the Nakamoto consensus, and then I've been doing finance, traditional finance for a long time. So like investment banking at JP Morgan, and then was investing in a venture fund in Silicon Valley in open source software. And really, that's when I discovered Ethereum in the early days. And to me, that's always been the most fascinating component of crypto, which is this idea that it is open source on steroids. These communities are coalescing really quickly when you coordinate capital and the resources, and you see it in DAOs, you see it in gaming, you see it in DeFi. And yeah, most recently was a partner at Verify Capital, which we were the first DeFi focused fund. I think we're the largest. And it was a good run. We were early days in a lot of the DeFi protocols. And at the moment, continue to invest my capital. A lot of what I do is focus with a few projects. Last year was Aave and a few other DeFi protocols. And yeah, I'm increasingly fascinated at this intersection of DeFi and the metaverse, which includes NFTs and gaming. And so spending a lot of time there. And I understand this panel is more, helping you founders or everyone in the audience to think about fundraising and how to raise a seed round. And so obviously I have a ton of experience there. Just I think I've invested over 200 companies or something at this point. So happy to lend my perspective and give any pointers to you guys.
Great. Yeah, thank you so much, Santiago. Let's dive in. So we have a couple of questions for Tushar and you, one from a founder's perspective, another from an investor's perspective, right? So we'll alternate between both of you. First is to Tushar. How was your experience in fundraising for crypto? And in your perspective, how was it different from a traditional fundraise?
Yeah. I think I've had a, in terms of a personal fundraising journey, bit of an interesting journey because I was trying to raise at the peak of the quote unquote bear market, and that's always not fun. Yeah, so I think from that perspective, I think I spent about a year trying to raise capital unsuccessfully, and then once things started moving, it happened really quickly. So I think there are a few similarities in terms of the raise. I think if you have to draw parallels to a traditional raise, and certain differences with respect to crypto as well. I think in terms of, I think the first thing is, who are you, trying to raise from? And I think if you're raising on the traditional side, you'd have your kind of traditional VCs and family offices, high net worth individuals. I think the story is pretty similar in crypto, although I think the distinction between like pure funds and angels sort of blurs a little bit, because I think a lot of angels are able to allocate huge amounts of capital as well, and in a lot of cases, angels are typically founders or early members of projects, and so the amount of value that they can add is a lot more. I think obviously dependent on the fund, but a lot of funds actually haven't maybe gone, a lot of the funds that I have spoken to haven't gone through the process of like incorporating a company, figuring out which lawyers to work with, how to structure your entity from a regulatory compliance perspective, who are good people to have on your cap table, who are not so good people to have on your cap table. Once you have money, what do you do with it? How do you build a brand? How do you build a community? Are there any specific marketing agencies that are better than others? How do you attract talent? And so I think when you're raising, I think these are some of the things high level that I think crypto founders, I guess, more specifically, need to keep in mind, and then accordingly target who to raise from. So yeah, like I guess since Santiago's in the call, like someone like a Santiago, I'm sure a lot of founders would, and I know he's recently moved on from Parify as well. I guess a lot of founders would want to raise from Santiago himself as opposed to Parify, although it was the same thing potentially, because maybe Santiago's able to help more in his personal capacity. And so I think that those lines between VCs and angels has blurred quite a bit in crypto based on and the other thing is, in general, I guess now it's true for like the traditional fundraised world as well, but I think there's just too much capital floating around in crypto, and so at some level it's an entrepreneur's market, and I guess there's only a handful of high quality entrepreneurs, and all the capital accrues to them. So I think in that respect, founders kind of choose, but I guess they're more spoiled for choice, in which case it becomes even more important from an investor's perspective to have that, I guess, that brand or that track record of helping startups out. So I don't know if that answers the question, but I guess high level kind of touches upon some of the things that you were alluding to.
Yeah, there's a second part to it, but we can cover that because it's also related to the other question I would ask. So Santiago, to you, when a startup comes to you or a project in its early stages, right, whether as an angel, they want to get on board, want you on board as an angel, or raise from Parify, what do you look for when evaluating that deal?
Mm-hmm. Yeah, it's a good question. For me, it's a founder needs to have a unique insight. What is it that drew you here about a specific problem in DeFi or an idea? And it's not so much like some of the best pitches I've heard are like 2 minutes long. And it's about a founder that says, look, I've been thinking about the way things are done in X, and I think they should be done with Y. And here's why, right? It's sort of like, I want to understand a few things when I'm talking to a founder. One is, are you going to build through a bear market? Because oftentimes that's sort of my main criteria is like, how motivated is this particular person to make it through? Because it's quite difficult to build in crypto. It's actually really demanding, and it's very stressful because when things go well, everyone expects them to go well. When things don't go well, the community really can be very critical, and it can be difficult to build in a very adversarial environment too, right? because you deploy contracts, and if they're not particularly well constructed and there's bugs, like, things break, and when they break, there's millions, potentially much more than that at stake. So I think, and it's not so much that like the founder needs to be super technical. Like when I first met Hayden, for instance, he learned Solidity on the fly. Like he taught himself how to do it. And I mean, I think that's like a word of encouragement to everyone, right? Which is, hey, look, obviously he's super smart, but he taught himself and he built one of the most successful, if not the most successful today, DeFi protocol, right? Stani comes from, he's a lawyer by training, but he was able to assemble a team, and he had a vision about a money market and carving out a particular niche within DeFi. And so a lot of what I'm seeing now is just copy paste in a particular other chain. So that to me is not interesting. I want to understand, hey, look, what is it that, and what brought you here? And it's really this idea of a unique insight. It's hard for me to describe it, but I think when you hear it, it's sort of, it was interesting hearing Vitalik, for instance, talk about his experience with colored coins and Bitcoin when he was at Bitcoin Magazine, and then say, hey, look, I have this idea of general smart contracts. And by the way, a lot of people try to do what Vitalik tried to do at that point in time. This is the thing. Most people say, oh, well, Ethereum kind of launched and nothing was around. It was like it was a very early stage, and it was easy to identify Vitalik. It was easy to identify Ethereum, and that's not the case. Right? There were hundreds of other projects that were listed at the time, like Factum and MadeSafe, and a bunch of projects no one remembers, right? So what I'm trying to say is it's never obvious, but I think like good founders are very thoughtful, and they also appreciate the things that they don't know. Because oftentimes I ask a founder, well, what are the things that you don't know? What are the risks? So like if your project doesn't work in 6 months, or I talk to you in a year, why would this project not work? And I think like founders have thought in a very probabilistic decision-making tree, and have thought about multiple scenarios, and also things that they're not very competent in, but they're focused on hiring the right people. So anyways, long-winded answer. But.
Great. Are there any specific artifacts that you expect the founder to have, other than ones that you mentioned? I know that they thought through things probabilistically and the founders personally, but from a business point of view, in terms of numbers, validation, any proof of concept?
Yeah, I think like really good founders are just builders, right? A lot of times, like I talk to a founder who says, look, I'm not looking to raise capital right now. I'm going to build this first, and I'm going to build a prototype, and then I'll raise capital. And it's very rare to find that in this market. Most founders are like, look, I have an idea. I want like $2 million and $20 million valuation. I'm like, okay. Like, what have you built, right? And so I think just good founders also have a really good, like, think in like 3, 6, 9, and 12 month sprints. Because like, I don't know, Tushar, you probably think about this, right? In crypto, there's no shortage of ideas, right? Oh, let's do a million things, right? And you can be pulled in a million directions, but really good founders execute on sprints and say, we're gonna get done this in the next 3 months, 6 months, 9 months. And I think they have that focus, and which is hard in crypto. I think you can always be pulled in a million directions, right? You always, some of the founders that I think get caught up too much in what is the competition doing, and oh, someone copied my protocol. And look, at the end of the day, it's open source. People are going to copy what you do. And so if you're being successful, so I think founders just have a lot of discipline and focus. It'd be like an overarching like theme.
Got it. Yeah.
But by the way, the last thing I'll say is they don't need to be, going back to my initial point, they don't need to be super technical. Sometimes they are not as technical, they have a good idea, and then they're really good at hiring technical people.
Fantastic. Tushar, in your personal journey, because you built Persistence from India, how did you go through like building the company as a private limited company, or deciding to then raise your seed round, right? If you had to do it again, would you do anything differently, or any insights you can share about some of the things that you perhaps didn't do well?
Yep. I think before jumping into that, I think to Santiago's point, I think some of the things he mentioned is like bare essentials, right? Like just founders building through a bear market. I mean, I think the bar in that sense, becomes super low, and I think most of folks who have done well, Synthetics, Aave, Uniswap, they kind of just, build through the bear market. So I think, high level, like ideally, you want, folks who, like it's not purely like driven by, money, because I think if you stay in crypto long enough, you will make money. But in terms of, I guess to your point, to your question about, structuring, I've kind of long maintained this, having worked with the Monetary Authority of Singapore during my, fund days as well, where, they truly have a very, very open mind and mindset. It becomes really easy to work with, folks, with regulators in Singapore. But the problem with Singapore is that there is no talent in Singapore, or at least developer talent. And so I think that combination of Singapore plus India is pretty strong, where Singapore provides that regulatory certainty, and India is where you source talent, both on the business end as well as on the technology end. Although I think over time, from a business, you can go fairly global, but I think from, especially when you're small, you're trying to test few things, getting your base team, the amount of money that it takes, amount of capital it takes to form like an international team is just, way too high and way too complex. And so I think from that, perspective, the Singapore plus India arbitrage, from a regulatory and from a talent perspective is pretty unique. So, that's kind of how we're structured as well. It's straddling across Singapore, India, and an offshore jurisdiction. And yeah, again, if I had to do it all over again, so we worked with, really good law firms that have advised us on the structuring and things like that. And I would definitely do it in a very similar manner again. It's a robust structure.
Got it. Great. So, Sanjay, this is it's a topic that it is, of course, could be quite subjective to each individual. When, like you said, right, people have perhaps not built anything and they want to raise 2 million at a 20 million valuation. But suppose they have built, right, and they perhaps worked on it for 6 months, have some early proof. How do you value different projects, and how can a founder think through, okay, how do I figure out my valuation?
Was that a question for me or Tushar?
Yeah, for you, Santiago.
I think there are certain like benchmarks in the market. At the end of the day, you're investing in the first round. It's just really, do you believe in the team and the opportunity to clear some sort of hurdle, right? You're shooting for at least 10x of venture. So can this be $100 million? Can this generate a 10x return, right? And so, typically at that stage, it's sort of like there's not much science to it, right? You can't look at the discounted cash flow. You can't validate anything other than the idea, the market, the team, right? Those three things. And there are certain investors have different views of what's more important at that stage. Some folks might say, like a Peter Thiel camp would say, look, the market's more important. If you're attacking a really large market, then you can have an okay team in a very large market do very well. And the idea is good, right? I think sometimes it's a pretty saturated market, so the team becomes more important. So it just kind of depends, but at the very early stage, I think there are certain heuristics, right? Which is, there are certain comps, right? You're looking at, which is on a relative basis, am I going to invest in an early stage project at a $50 million valuation? It's going to require probably an extraordinary team for me to pay that much, which is, I think, is quite high. When I'm comparing my opportunity cost of capital, right? Most deals at that stage are either sub 10 million or between 10 and 20 million. That's typically where things tend to land. And sometimes good founders expect more than that, above 20. But I would say, for a founder, just flipping it a little bit is from a founder's perspective, I think they should, and I always tell people when I'm investing, like I like to think like a founder, and I will tell them, look, because as an angel, right, at the moment, and even a Parafund, I love doing club deals because I want to bring in a curated group of investors that are going to help a particular project, especially this early on a number of dimensions. And crypto is very multidimensional. So I don't pretend to help teams in everything. right? I know my strengths, which is designing token design, token economics, go to market, and partnerships with other protocols that I'm an investor in, right? But I'm not an expert on Solidity or audits. I can't, but I know there are other people out there that can help, right? So I'll bring them in. I think a founder at that point, one, just in a word of encouragement, this market, to Tushar's point, will probably give you a higher valuation. If you really want to optimize for valuation at that stage, yeah, you can probably squeeze in another $5-10 million on the SAFE or whatever instrument on the valuation. But are you bringing the right partner? Is sort of the most important thing at that stage. And so I would encourage founders to always think from that perspective, which is the incremental dilution, if you're raising at a lower valuation, worth bringing on a particular partner, an investor? Because, I know that it's very common to hear in crypto that VCs are worthless, but they're not. They're definitely not. Not all VCs are created equal. Some angels can be super helpful. Others are not. And so, do references, right? Talk to other people, like connect me with one or two founders. Those are the very concrete things that a founder can do when he's choosing his investors. And it is a very founder-friendly market. So take the time. It's like you're entering into a long-term relationship, a marriage of sorts. Well, make sure that you spend time getting to know your partner before you actually commit to anything. And I think that is more important. Raising at a sensible valuation with a good investor is worth probably more than just optimizing for the highest valuation that you can get from some random investor that may not be as helpful. But I'm making generalizations, but I think you get the point.
Yeah, and I think it's also very relevant to how we think about raising the traditional startups, right? Not focus too much on valuation, but who you get on board. Because valuations ultimately they take care of themselves, if the product is successful. Tushar, I saw you raising your hand for a point that Santiago made. This also ties into, how has your experience been with the investors that you have raised from? And in crypto, most of the VCs that we see in the traditional startup space are not in crypto right now, right? It's mostly new funds that have come up that are crypto native. So how do you look at identifying who's the right partner to work with? And as an investor, how do you see, is this a bad actor or do they have my best interest at heart? Essentially because it's global, you don't end up even meeting them in person, right? So how do you identify the right people to work with?
Yep. I think it's the first step is just identifying what you're good at and what you're not good at, and how can you supplement that with, what you or your team does not have, right? Like, so for example, personally speaking, things like, tokenomics, go-to-market, marketing, community management, token management. I think these are things that over a period of time, my team and I have kind of gotten a good grasp on. And so we don't need that much support, right? We don't need that much support in terms of mechanism design, the design for the actual application, how that is going to look like. We don't need too much help on. In our case, what do we need the biggest help on? Opening up certain doors that we can't open up on our end, which includes, things like institutional custody service providers, folks, better validators. It could include folks who can provide liquidity to the product, or TVL, and in general just lend credibility, which again leads to opening of certain doors that may otherwise be closed. So again, at least in my mind, extremely clear the things where we need help, extremely clear where we don't want investors to meddle with what we're trying to do, because we have internal clarity. Of course, there can be certain insights that you may not have, because of course you don't know everything. And so again, in those cases, those insights can be, highly appreciated, but are not really required. So I think the first step is just as a founder, sitting down, thinking, what are the things that I already know? What are things I'm already good at? What are the things that my team is good at? And then, based on that, what are our weaknesses? And then going out and, specifically looking for those things. So I think that is one. In terms of, my experience, again, we went through this bear market where I was, last year, in San Francisco from Jan to March, which is probably the worst time to raise capital, and eventually, couldn't raise capital, at least in the beginning. And again, what we did was just hustle, right? So what we did was we started running validator nodes on other networks, where we convinced the foundations of other networks to delegate tokens to our node. And then basically whatever revenues we were generating from staking rewards, we would liquidate those to be able to pay salaries for about a year. But then what that kind of allowed us to do was, create a team that was very, very, that had really strong foundations and roots. And we were able to build those relationships or that loyalty in a bear market where shit was hitting the fan. And so, at least I like to believe so that, our team has a greater sense of belonging in an industry where there's not that much, I think, loyalty and so many opportunities. We created that because during the depths of the bear market where shit was really hitting the fan, we kind of looked out, for our team. And so, folks who have been in crypto long enough know that, shit is going to probably hit the fan at some point in the future again. And so inspiring that trust in the team that, okay, even when shit is down in the dumps, you're going to be well looked after. So I think, again, just had a bit of a unique journey where, we were not able to raise capital, found an innovative way to generate monthly staking rewards, using that to subsidize team efforts to build the product, which is, again, I think in hindsight, it's been a great blessing. And of course makes for a great story.
Yeah. Sandu, as a follow-on to that, from what Tushar mentioned, so they were able to show some numbers around how they sustain themselves, want to get adoption or visibility. Now, let's say you have raised some money and now you're in the market, and the numbers that you would show are perhaps different from what you would show in a traditional startup, right? Of why this would essentially work beyond the team, the vision, the goals. So what numbers or metrics do you look at for a project or a team, perhaps as a part of Parify at slightly later stages?
Yeah, I mean, I think in DeFi, what I liked about DeFi is that you understand like certain fundamental metrics that you can apply. You look at a protocol like Sushi, right, or a Uni or Maker, and very concretely, you're seeing, okay, like here's volume, here's a fee that you're taking on volume, and then you extrapolate forward and you look at historically how much volume Sushi or Uni's produced, and you say, okay, well, if this continues, or you make an assumption on volumes over time, you say, okay, well, this is the cash flow stream that's going to come in over the next couple months, year. You run sort of a discounted cash flow model, and you say, okay, well, the sort of the fair market value of the token is this. And then you look at more different nuances like Sushi and Uni or AMMs. You can value them in a very similar way, but one protocol is issuing essentially a dividend to Sushi holders, and Uni does not, right? Those fees don't. They're sitting in a contract, but it's still, you're holding the token that potentially could have a claim on that. So that's very clear. In Maker's case, you have the number of debt outstanding, right? And Maker that's being burned by the fees that are being collected based on stability fees, right? And you open a CDP on Maker, you're paying certain fees to the protocol, right? And so that, to me, that's what drew me to DeFi, right? I mean, you can do fundamental analysis on these protocols, which is, I talk to traditional investors and they're very surprised, right? Because in crypto, they're used to thinking that crypto is sort of like vaporware and it's all ideas. And it's like, wait a minute, guys, like you're investing at a like forward PE ratio, which is price to earnings, right? If a protocol is trading at 10 billion and it's producing, $1 billion in revenue each year or earnings, I would say, then, it's 10 times forward PE ratio. And that's a distress multiple, where traditional markets like companies like Apple and Google are trading, and Netflix are trading at like 40 times, 50 times. So it's like, well, or 20 times, and so you're like, hey, well, listen, at that point, for me, I understand my margin of safety is quite high. So, I don't like to necessarily focus too much because I know we're talking more early stage, right? But at least the founder should have a general idea of how the protocol is going to function as a business model. Or say, hey, look, my goal right now is to just say, I want to acquire as many users, and then at the end of the day, that has value potentially. I feel that's a little more difficult for me to wrap my head around. I like businesses where, you know, the founder is thinking at some point critically of how he's going to monetize it and create a viable kind of business. Yeah.
No, so if I had to summarize it, it's a combination of what on-chain metrics can you show for proof, and if it's DeFi, then doing some comparables with other projects and sort of projecting.
Yeah, if you're super early, then you say, hey, look, there's this other protocol that already exists and is doing things this way, and I'm gonna model sort of that plus maybe it's just that, or copying those elements, and you have reasonable comps in the market. You could say, if you're building an AMM, well, we know how those businesses work. If you're building a money market, we know how those businesses work. If you're building something else, then I want to understand, hey, how are you thinking about the viability of this protocol? And give me some examples. Early, if you're super early, give me some examples of other protocols that are farther ahead and how they've done it, and why you're going to do things the same or different or some modification to that. And I think that shows, I'm not expecting a founder to fully understand that. And sometimes, like Facebook in the early days, for instance, like not talking about Web3, didn't really have a monetization model. They said, look, at the end of the day, we're a social network. We want to build into be the largest social network in the world. And once you have, and you become that, then you can do things, right? You can monetize, you can create, you can generate a lot of revenue by selling ads, right, on the platform. That's how Facebook makes money. But it was first and foremost, Mark Zuckerberg was really just focused on the product. He said, I want to build the best social network, and that's fine, right?
Got it. Yeah. So Tushar, one last question before I get to Santiago. In a traditional startup, you have equity where typically the only shareholders are the founders, the ESOP pool for the team, and perhaps the investors, right? So, and in crypto, the first time you think about a split of tokens is when you're perhaps raising your first seed round, right? So at that point, how do you look at token allocation, and to what buckets should you allocate it to?
Yeah, I mean, again, apart from the usual folks that you would want to, keep certain tokens for, which is, I guess, investors and team members, founders. I think high level, it's very difficult to achieve very good, distribution of the token. You end up, having the foundation or the founders or like some early investors holding huge pots, and then over years you have, then and through different stages of that particular project, you have token distribution to members. I think, some projects have done a phenomenal job in terms of kind of longer term distributions to users, which can be great. But again, I think in DeFi, you have like few tens of thousands of folks who are providing a bulk of the liquidity on multiple platform. So, you still remain, again, I think there's different degrees of, I guess, centralization versus decentralization. But I think, distributing tokens to your early users and then hopefully making them very, very wealthy and rich is, I think, a great way to become a successful project. And then, over a period of time, you'll have all sorts of kind of stakeholders, getting exposure as you get more institutionalized, as you have, greater custody providers, as you integrate with a greater number of wallets, as your product grows, as your marketing efforts grow, as your brand grows, as your regional presence in different non-speaking English parts of. So again, there's no fixed answer, but I think if you do solid token distribution to the community and to your actual users, and them becoming the most vocal kind of supporters for you, I think that is, in general, a pretty decent outcome.
Even Sandeep touched upon this when, instead of holding tokens, you look at how can more people have ownership, and sort of incentivizes them to take part in your network at very early stages.
Yeah, it's again, I think it's been widely debated upon, and but it's like just holding tokens as a business model, right? Which is, if you have distributed a big part of your tokens, but the part that you hold is more valuable because you distributed tokens, then I think that's a viable way. It's a viable business strategy where you're as a foundation, you're holding treasury in your tokens, but those tokens are getting more valuable. I think it's a fair way to proceed.
Yeah, great. So last question to you, Santiago, before we take up questions from the audience. If you are a traditional founder, may or may not have been successful, say in Web2, right? And you understand that space very well, and now you're moving to Web3 because of ideologically you're aligned or you see opportunities. What thoughts, frameworks, or prior knowledge should you sort of discard, right? And do a shift in mindset when you're entering Web3?
That's a good question. Things that you should discard from traditional fundraising. I would say be prepared to fill your round extremely quickly and have all kinds of investors pull you and ask for really, you're going to be oversubscribed. It's not a bad problem to have, but have a very clear, which is difficult, right? In traditional markets, that may not be the case, right? But capital moves really quickly in crypto. There are many investors out there, many types of investors out there, right? It's in traditional markets. Like I think like angels can be super helpful, and maybe that's not as appreciated in traditional markets. So I don't know. I don't necessarily think that you should discard stuff. I think you should be mindful of, like, as you're building your company and as you're fundraising, look, there's this idea in crypto that, like, we should reinvent everything. And that's not necessarily the case. Like, don't reinvent vesting schedules. There's a reason why they work in traditional equity models. Like, long vesting schedules, to Tushar's point, are super important. So be wary of investors that kind of promise the moon in crypto. It's never the case. It's too good to be true. It's too good to be true, right? Just optimize for the right founder, do things. Yeah, focus on the tech, focus on building the team. Don't have short vesting schedules. It's gonna come back and bite you in the ass. Make sure that everyone's aligned, investors and founders and advisors and everyone, right? I would say that advisors in crypto, like, don't really matter much. Like, I don't know, like, this is a very 2017 kind of model, which is everyone had like 3 pages of advisors on their deck. It's like, okay, well, like, it feels like a scam. But yeah, I think I always like asking a founder, like, what are you optimizing for in this fundraise? And sometimes I get a good answer. Most of the times I get like an okay answer, and it feels like the founder hasn't thought through. And I'm like, who's your ideal partner? Because you can find it. And I think I want to understand that. And I think in the crypto, you have the luxury of having many different types of founders. Whereas if you're a software company in the Valley, you're going to raise from maybe 2 or 3 funds. But in crypto, there's just so many types of investors. So, have a reasonable understanding and do homework on these investors, make references. So that's super important.
Got it. So I think then one of the shifts would be that not having a scarcity mindset, that there is more money for the right people. But I guess even in traditional startups now, markets are flooded with too much capital. But I think, like you rightly said, there are too many people, so choosing also becomes harder. So you have to be more clear about what to optimize for on your fundraising.
Correct.
Yeah. So those are the questions I had, and thank you so much, Tushar and Santiago. We have a couple of questions in chat. If there are more from the audience, you can raise your hands or drop them in the comments in the chat. So one is as an investor from Rohit. How can a retail investor with a good crypto investing history become a professional investor?
Build a good reputation. It's all that you have, really. I mean, obviously you have capital, but be helpful to teams. Join Discord channels. I've seen really good anonymous investors in crypto frogs and avatars that are getting into projects earlier, because especially with fair launches, be early, right? And I think protocols now understand that, to Tushar's point, you reward a community, and sometimes that reward is tied to the level of activity and engagement. Maybe as a liquidity provider, maybe as a governed participant in Discord or what have you. Just being early pays off, right? You don't have to focus on everything, but just know your lane, know what you're good at, and just get involved in 1 or 2 projects. and build that track record. And I think like founders want to work with people that another founder vouches for, and again, it goes back to it's very small network. So build that, right? I think traditional funds are understanding that like they need to be very community focused too. And if they're not community focused, I always said, look, Verify, the way I was investing is I'm no different than any other community member in this world. And so community focused fund was what I was optimizing for. And to this day, I mean, I think it's the most important thing. So build your reputation, play the long game. Everything's on chain. So whatever you do on is going to be visible. If you're dumping tokens immediately, well, just know that it's fine. Like there's nothing against that. Like you manage your risk, you're an investor, you're a professional investor, it's fine. But just understand that like people are going to know. And there's consequences to actions and good and bad. So I think, I don't buy this argument that like, okay, sometimes funds do get a call earlier than other potential investors, maybe do get an access to a particular deal or not. But look, you signed the sushi OTC deal, this sort of the treasury diversification proposal. You went to the community and the community didn't like it. It didn't get passed. So I was doing a lot of these deals, like we did Badger and Lido and a few others that synthetics that, you just need to be very thoughtful of the community. And so now it's sort of this game where, or just this dynamic that, a VC can't just, muscle their way in, because then it creates a bad dynamic. When you lose a community, you lose everything. Value in these networks is, at the end of the day, blockchains are just coordination mechanisms.
Yeah.
If you don't have a good community, nothing matters. Everything's a social construct, right? So if you don't have a community, then you're done. And so, founders need to be thoughtful of how they build a community. Investors need to be thoughtful of how they are part of the community, and if they're positive. Everyone in the system needs to just be very thoughtful of what value they're bringing onto the community. And there's, in game theory, there's really interesting kind of not interesting, it's just a very basic principle, which is, are you playing an iterated game or are you playing a finite game? Playing a finite game is just doing one strategy, like tit for tat, and then you just win one game and you exit, you rug pull or whatever. Fine, you can do that. But as Tushar said, the longer you stay in crypto, the more value you can compound and accrue. And it's just not monetary. It's also very rewarding to be part of these communities. And so play the long game, have long vesting schedules. That always tests conviction. Focus for 5-10 years time, right? Not just the immediate cookie that's in front of you.
Got it. Okay, the next one I think could apply to both of you. That is, both videos asked, how can we connect with you for funding? But I think, a higher question is, how do I reach out to these investors that I've identified? Traditionally, it's almost known that, investors only meet if they only do warm introductions, right? So you have to get in touch with the portfolio company and reach out. How different is it in this space? In reality, how do typically people get connected to investors for fundraising?
If you're not on Twitter, I'll find you, or reach out to me on Twitter. My DMs are not open, but you can tweet at me, and that's how I operate. I tweet sometimes, hey, I'm looking for a particular project to do this or that, who's building it, and then 5 people comment up, and I'm like, okay, and then I've invested in so many projects like that. So if you're building something interesting, just tweet at me. And if I'm not following you, I may be following you or not, but just DM me. And so that's how I like to see a lot of the history of a founder of a project and how they're like, but if not, I'm always available, I guess. Just to give you a sense, per week, I'm probably talking to 60 new projects.
Got it. So it's much more informal, Twitter, Telegram, wherever you can get those more open to talking to founders.
Yeah. Or an introduction, so-and-so knows, like, hey, look, you might reach out to me, how to get it. So like, but sometimes it's high fidelity nodes in the system, like, that say, hey, you ought to meet this founder. But I like to be a part of hackathons. I like to be part of these discussions because people are listening, and if they're building something interesting that they know perhaps that I'd be interested in, a lot of times good intros come that way.
Yeah. Tushar, what about your experience of getting in touch with some of these founders? You spent in SF a couple of months, and then of course you also remotely raised from India during the pandemic without meeting any of them. So how was your experience of getting in touch and reaching out to these investors?
think crypto is one space where you can actually truly hit up anyone on Telegram and Twitter. And I think once you have, it doesn't take much, right? Like if you're not being able to reach out to anyone, just like start tweeting for a month. And if you do that diligently, like you'll build some sort of a reputation, and you'll have one person, one sort of quote unquote thought leader follow you, who you can jump on a call with and then request for like a couple of intros, and then within 2-3 months you can get to know everyone. I think it just comes down to how much you're willing to fight for it, how badly do you want it, and that's it. I think it's still a small enough space where you truly can hit up anyone. Yeah, I don't think there's any excuses for not getting intros in crypto. It is, you can, even if you don't know anyone, just like create content, write a nice blog post, try to create engagement, write, a few tweet threads, and you can be an insider in no time.
Got it. So we have 2 more questions, one by Vyankatesh, but I think it's pretty straightforward. Essentially, they're asking, do you prefer investing in a marketplace startup where competitors, the space are obvious, or would you rather see the startup as a straight clone of other, or as one that provides a different value to users? I think there are a couple of questions within them, but I think it's essentially, are clones okay or not?
I don't know anything against clones. I mean, it's open source. So how do you define what's a clone and what's not a clone? I mean, ultimately, a lot of things are building on prior art, but there are ethical boundaries that I'm not willing to cross. This is straight up. I mean, look, there are a lot of clones of DeFi protocols that have worked in Ethereum and are being built in other protocols, like other layer ones like Solana and Terra and Cosmos. That's okay. Why? Because it's a different blockchain, right? Maybe Solana, certain applications that have been built in Ethereum can be more successful in Solana or Terra because it's just a different blockchain, right? It's perhaps cheaper, it's whatever. So in that case, like, I think it's really interesting to invest in those ecosystems. And I don't think of it as pure clones. There are just other projects that it's just blatantly just a money grab, which is like, I'm just going to build like a competitor to Uniswap and just copy it. A lot of the hacks in DeFi have happened in clones, where the project just blatantly copies it and doesn't maintain the code, doesn't know the code really well. So I'm always my bar is higher when it's just a clone, for sure. I like to, and I've been saying this for a while, I think there hasn't been that much innovation in DeFi as of late, and I want to see new primitives. When you build sort of the basic underlying infrastructure of what exists in traditional finance and Wall Street, let's build on top of that. To build new primitives that can't exist in traditional finance. So I'm looking for that. That inherently for me is always more interesting. But I've invested in things that have worked in Ethereum, and I want to support ecosystems like Terra and Solana and maybe Polkadot and Cosmos, if you will. So yeah.
Okay, that's a fantastic note to end our discussion on. Thank you so much, Santiago and Tushar. Any unanswered questions, we noted down, we'll answer them, or we'll reach out to the speaker and get them to share the thoughts. Before we end, for everyone who's here, we just have a quick announcement to make. But I would like you to thank all the speakers who have joined us here before we get to that. Santiago's Twitter handle, we will share that, Anil.
Thank you so much for the time, guys. Hopefully it was helpful. And look, it's always exciting for me. I don't know if your audience is just in India, but I will say that a lot of the projects, I have a very strong inclination to invest behind Indian-based projects because I think the caliber of founders, the work ethic is super, super high. Like Matic as an example, and DeFi Dollar and Arcana. Like, there's just a really good community in clusters in India, I think, that is probably one of the strongest communities in crypto. From a country perspective, I tweeted this the other day. It's like Vietnam, Singapore, India. There's some really, really good projects coming out of this. So there's a lot of local resources too. Not everything is on Twitter. Not everything's in sort of the metaverse. Like, go to meetups in real life, right? I'm sure there's a bunch in your city. Obviously, COVID's difficult, but there's a lot of really good founders that can give you a lot of mentorship, especially if they're in your community, like in real life community. So yeah.
Fantastic. Thank you, Santiago.
Thank you, Arvind.
Thanks, guys.
Thank you.
Take care. Have a good weekend.
Bye.
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 Yeah, so we have a pretty interesting announcement to make. There are a lot of people in the community and from whom we interacted with who have an idea but need some point to get started, right? And most of the resources online are focused on developers of how to build smart contracts, how to build connections, adapters, etc. So we partnered. Let me just share my screen. Yeah, so we partnered with a new initiative called Builders Tribe. And the goal of Builders Tribe is exactly this, where they work with founders and based on the stage they are at, they help with them, right? So, very high level, you can think of Builders Tribe as a Web3 incubator, right? Where they are people from the space who understand the space and have the right network. And two ways that Arcana's community members can work with Builders Tribe is one, they have a free learning program for 3 months, very early stage. You might be in Web2 and you're exploring some validation. You want to understand the space better. This 3 months will help you do that. And once you're done with that, either you realize that this is an idea you want to continue working on, and then you proceed to raise money, or you switch to something else. And once you have raised that initial set of money, you now want to spend more hands-on and look at how do you go to the next stage, right? From 0 to 1. And that is the second half of the program, where they help you with raising money, doing demos, pitch days, and they themselves also invest in certain ticket sizes in your project. And we will also share this information with you on how you can participate. But at a very high level, if you have any interest, we'll send a link so you can talk a little bit more elaborately, and we'll help you get into their program. This is how they imagine working, where there are two stages of the teams that they work with. One is, I'm guessing most of the audience that we have are in this stage where they're the MVP, POC, or trying to validate. And for startups that are looking to launch and raise the next set of money, they have this, which is less time commitment, but also more involvement from their team. So if any of you are aspiring founders in blockchain, or want to or have an existing project and want to scale it up and get more connected to the ecosystem, do reach out to us. I'll share all the information with you folks. So with that, thank you so much for everyone who came here. It's been 2 hours, but hope you found as much value as I did. We will also share the recording of this talk through your email IDs, and to tweet anything that you found insightful and tag us and others. So we do have your email IDs. We will reach out to you on that, or you can tag Arcana Network on Twitter or Headstart, and one of us will take it from there. Yeah, Divankar, you can you just expect an email from us with the information on how you can show your interest in Builders Tribe program. Yep. In the meantime, you can also follow us on Twitter and Telegram. We do update. We do a lot of work in helping both developers and founders through multiple things, and Builders Tribe is one of them. So you can follow us on Telegram, and we'll announce more initiatives that are focused on this. Great. Thank you so much, everyone, and hope you have a good weekend.